Nice to see you, Peter.
Hi, good morning.
On this Tuesday. You know, I was going through some of your index targets for this year, 2010, that you basically published, I think, back in October or January sometime. You're calling for the HSI to reach 29,000, H shares to reach 17,000.
Right.
You're standing by that prediction, is that right?
Yeah, I'm still very positive on that.
Even though we're a long ways off from that mark.
Yeah, I expect the market momentum will start to pick up in the second quarter. Especially a lot of bad news have been reflected in the first quarter. But you can see that the Hang Seng Index is still very stable on a 3-month basis. So once the bad news has been digested, the strong corporate earning growth will start to pick up or to drive the Hang Seng Index to higher level in the second quarter.
But don't you think 29,000 is a little over bullish at this point? We're looking at 21,000 and some change. You think we're going to gain 8,000 in the second half of this year?
Now, when you look at the strong corporate earning growth of more than 20% this year, plus the low interest rates worldwide, this will provide more momentum for the index to pick up, especially when many investors will be looking for higher returns.
Okay, let me just ask you about liquidity. I mean, that was one of the reasons that you cited these high levels, these high, basically these high benchmarks. But you know, liquidity hasn't really come into the market. Some would say it's pretty disappointing so far.
Yeah, liquidity has been contracting year-on-year basis in the first quarter. But starting from the second quarter, you can see that I don't expect China will tighten the liquidity further. So with inflation mildly going up, more investors will be willing to pick the money out from the bank deposits and try to invest either in property or mostly in stocks.
Okay, and that's why you expect the Shanghai Index, I think, actually, pardon me, Guotai yesterday said that Shanghai's index may drop a further 17%, despite the fact that he said some of this liquidity might be going into property and stocks.
Now, I think when you look at the stocks listed in Hong Kong, like the Hang Seng Index or the H-share Index, there will be more momentum for it to recover compared with the other indexes, especially worldwide, the interest rate environment is still very low. They will try to look for higher returns by investing in Asia.
And what do you think of this knee-jerk reaction from investors on concerns of tightening? As you know, they've been selling off in certain industries that they think might be affected by higher interest rates, also more government, exit of monetary stimulus. But what do you think of that? Are you concerned about tightening measures coming?
Yeah, I expect in the next couple of weeks there may be further tightening. For example, there will be one hike of reserve requirement ratio. But after that, this overhang will likely be moved. Even for interest rate movement, I think the upside is one time for the second quarter, and then maybe one time in the fourth quarter. So after the removal of this overhang in the second quarter, the third quarter, probably there will be momentum for the Hang Seng Index to recover.
Yeah, and you actually favor Chinese banks here, don't you? ICBC has been one of your top picks for a while.
Yeah, after the consolidation, the first two months, many banks are offering very good value, like ICBC or even BOCOM.
Yeah, pretty cheap valuations. We're looking at maybe, 11, 12 times forward earnings at this point for these shares. But what about, this basically downsizing of loans? I mean, I think the Chinese government is trying to rein in the record credit boom that we've seen on the mainland. Doesn't that mean less profit for these big banks on the mainland?
Now, although the liquidity will be smaller, but however, when you look at the interest margin, they are expanding. When their borrowers are harder to get the financing, they will be willing to pay high interest rate to the banks, which will expand the margins. Okay,
and your target price for ICBC is $7.60 Hong Kong cents, is that right?
Right.
Probably on the bullish end of our analyst survey.
Yeah, it's slightly above the market average, and we are still quite positive on the overall trend.
Okay, Peter.